All right, there we go. It should be working. That's all done. Yep, stream is running nicely, even with the shitty German internet connection. So let's see what we're working with. Earlier this London session, we didn't make it up to the Asia buy-side liquidity level, or right now the current high of the day. We kept on getting resisted at the 0.5 standard deviation of this manipulation. Didn't hit a 2-to-1 risk reward of our entry. I decided to exit early around the VWAP. Didn't even hit the midnight level. And instead we sold off. We did the same thing here right on NQ. We took out the low of the day right here, but we still on NQ didn't manage to go below yesterday's low. So we're bouncing away from that, while on ES we've already done that twice now. So right here we have no SMT divergence because we didn't make a higher high. NQ and both ES didn't take out Asia buy side. So right here, Asia buy side liquidity and Asia buy side liquidity here on NQ. We have the new week opening gap where we kept on holding resistance here on NQ. Here we had our market structure shift, breaker block, bullish fair value gap. So on NQ, the 2022 setup played out better. We were watching this during the London live stream on our Discord, 36 points. That would have worked out, but that's... no, let's leave it on here. Doesn't hurt. We took out sell side one more time and we immediately bounced away from it. Now consolidating here on ES, that really looks more interesting. It's 9:25, so actually in 4 minutes we already get the New York Open. And just from a pre-session gut feeling before market actually opens up, I kind of expect a reversal. It's really looking tempting for a quick move to the upside. Just looking here at the 5-minute time frame, let's check out the hourly time frame. So on the hourly time frame here, comparing both ES and NQ, let's actually do get rid of these drawings here. We took out the low of the day. That's done. Let's use that same red line here so we can compare the both of them. NQ, relatively speaking, already took out Wednesday's low from last week. ES did not yet. This would be Wednesday's low. We already cleared that. Or no, Thursday's low. What? Wednesday's low right here. Yeah, so overall NQ went a little bit further into sell side liquidity yesterday on Monday, but also reached the previous day's high right here. ES didn't do that yesterday. So right now we're just forming lower lows and lower highs on the hourly time frame on both ES and NQ. We have relative equal highs above here. Let's check out the 4-hour time frame. Also lower lows, lower highs, lower lows. 15-minute time frame. Potential order block, continuation up higher. On both charts really. But let's leave it at that. We're gonna compare both NQ and ES on the 15-minute time frame. Zoom in here so we get a good idea of what's happening. For the New York Open in 2 minutes. From a gut feeling, I would say that after this reaccumulation, stopping most of the London traders out, trapping new shorts into the market, inversion fair value gap. Let's see what happens around this area. And a 50%. Let's use the ICT all-in-one indicator to show us our 8:30 open. 8:30 open coming in right here, consolidating around that level. We're almost back to the VWAP. So let's see, 1.5 more minutes to go. And I'm gonna use these to quickly talk about the new banner that you see right now for the YouTube live stream. So right now you can save 50% on our VIP memberships. Let me go back a little bit. Apex Trader funding 90% discount is ending today. And Take Profit Trader Sale 50% is also ending this week. What else? And the most important, what the newest update is that Trade Day is starting their activation fee on December 1st. So if you want to sign up with Trade Day, now would be the time, or any time before December 1st. And if you use the link in the video description below, you get a 20% discount. Right now I'm uploading a, let me go to my YouTube. YouTube Studio. Content. I'm uploading a new best futures funding firm video as we speak. I'm also mainly talking about, how you can leverage trading with the Apex Trade copier towards the end of the video. So it's worth checking it out once it's all uploaded and checked. But I think now it's time to get back to TradingView because we just got our 9:30 opening. We tapped the VWAP and the consequent encouragement. Gut feeling wise, I would expect higher prices here. After immediately moving away from sell side, we took out this low and this low right here. We didn't take out the London session low. No, we did not. So that didn't happen. So let's just watch and see and wait for a good opportunity to be presented. Like we did during London, we saw the sell-off. Then we started to consolidate. We're considering shorts, but we didn't get the bearish share value gap entry. Right here, if we zoom in, we were looking for a potential bearish share value gap to continue the bearish momentum. But price not leaving behind a inefficiency really started to let me think that we might not be continuing lower, then especially followed by this next 5-minute candle, leaving equal highs behind, really rejecting away from the previous day's low. That's what I want to see if I want to trade the reversal, leaving behind a new bullish fair value gap, overlapping with Monday's inversion fair value gap right here. Little accumulation at the low, or we could also call it a left shoulder head, right shoulder, inverse head and shoulder setup with a bullish fair value gap right here as our entry. We didn't get the confirmed market structure shift here on ES. We did only get that on NQ. We already spoke about that. We entered anyway based on the 2022 setup that just hasn't been confirmed / inverse head and shoulder setup. With 2 contracts, ending up with $400 profit, taking partials at the VWAP. And the second contract, closing that one out as well afterwards. At least on ES, all we did was go sideways. On NQ, we kept on making higher highs and higher lows, almost or getting really close to our Asia session high. ES didn't do that. ES really struggled to move away from the VWAP. This is our buy side right here. Didn't get above that. We didn't continue to make another higher low and higher high. But that's just how it is sometimes. So right now we retested the 830 level and filled in this entire 920 AM bullish share value gap here on ES. I would prefer this to hold support if we want to push higher into the Asia buy side liquidity pool, like NQ is doing right here basically. We retested the bullish share value gap here and we're really showing momentum to the upside. I know we have a rejection wick, but right now they're going in the opposite direction. So we see ES continuing lower while NQ is pushing up higher. The question is, which one is correct? Would we take a long based on this fair value gap for ES to basically do what NQ is doing right here? We can take a look at the 1-minute time frame. We just filled the 1-minute inefficiency here. But we'd also have relative equal lows sitting just below here. So this would be an easy sell side liquidity grab before continuing higher. But let's see, wait for that 1st-minute candle to close. 5-minute candle. Already rejecting. Let's take a look at NQ. Yep. Looks like the long was correct. Not 2.5 points from the 830 open. Nah, too risky. Don't like trading the open immediately. Wait for a nice setup afterwards. So once again, buy side liquidity, that's our London buy side. London buy side, move that to the right. Right here, our bearish fair value gap, bullish fair value gap, equal low sell side right here, and low of day sell side. Let me move that down here and label it as London sell side. Put that at the bottom, London sell side, and then we have more sell side below. Right here, these relative equal lows, and the previous week's low would be coming in all the way down here. That's still some way to go. Extend these sell side liquidity targets out to the downside. Basically every short-term low here, or relative equal low to the left, or from Tuesday, the 21st of November, if we want to dig down lower. That's the calculation actually. If you guys want to get the explanation here on the live stream as well, well, it's included in the most recent best future funding firms video that's right now uploading as we're speaking. But yeah, just the overall math behind using the Apex trade copier with 10 50k Apex funded accounts. Let me know if you want me to talk about this. If so, yeah, feel free to let me know, and I'm gonna talk about it when we have a little bit of less action going on here on the market. So we kept respecting that 5-minute bullish fair value gap. ES is still lagging behind, and Q is almost back or at the new week opening gap and the A-sharp buy side liquidity. Quick stop hunt, immediately moving away from that consolidating 930 continuation. But this doesn't lead me to take a long on ES right away. There's no real setup in here other than a continuation trade. I'm already up $400 this morning from the London kill zone, and I'm going to try to protect capital. Right now here on the 1-minute time frame, all we do is consolidate. Not really sure where we want to go. We have buy side above and equal low sell side below, and below here at the low of the day. So let's see. And usually openings where one index is consolidating or going the opposite way. That's in this example, ES is going down, NQ is showing strength to the upside. Usually a good open to avoid. We don't have news today either, so no news Tuesday. Let's see how that plays out. Take a look at the DXY. The DXY filled the new day opening gap, took a sharp buy side, and continued lower below the previous week's low, while EU hit the previous week's high. So EU took out last Tuesday's buy side liquidity. And if you remember from the weekly outlook that I share with the VIP members, our target is sitting right here at 1.1. In regards of a setup, well, the only proper setup would have come in right during the New York kill zone. We take out all the sell side liquidity right here. Let's mark this out red. But we failed to continue lower. We bounce once again off the new week opening gap. We shift structure back to the upside right here. Leave behind a bullish fair value gap. So after sweeping sell side, we aggressively move away from that, leaving behind bullish inefficiencies. Breaker block, we enter on that. Target 1.1 or 20 pips, 40 pips, whatever you like. The A-share session high. Well, an entry down here really tricky because we didn't sweep any major sell side liquidity. We had a move to the upside, but afterwards it was just big range job. We form a higher high, higher low, higher high, higher low, higher high. Then we quickly run out all these stops below all these higher lows. total soup setup before reversing back up using inefficiencies to deliver into our previous week's high. So right now I would just anticipate bullish share value gaps towards support until we deliver into our daily buy side objective and our 1.1 institutional level. Just as a quick outlook here on EU, I want to really bring my attention back to the indices. NQ starting to retrace. Now we have 3 equal lows right here, paired with a bullish share value gap and paired with yesterday's low. So that's still being respected right now. We see that every time we bump into the VWAP, we get rejected. What I would have liked to see would have been a sweep of these equal lows here instead of just leaving behind another equal low. If we would have seen a sweep and the immediate rejection, that would have, well, short-term low cleared, 1 minute time frame likely rejection, market structure shift, break in structure, fair value gap entry long. But that didn't happen. Let's go. All right. Let everyone know that we're streaming live. Let me copy the link of the stream. Okay, we're processing 4K. So in 90 minutes, the best future funding firms part 4 is being uploaded, where I talk about all the major changes and mainly also about the Apex Trader funding trade copier and the opportunity it presents compared to all the other future funding firms. There we go. All right, let's get back to trading view. We're still inside our range. Now anticipating support on this bullish share value gap until we reach our daily buy side objective. And for NQ sell side wise, now I think the best thing that we can do right here for the DXY is go to the daily time frame and take a look at where we're at right now. So let's turn on our daily analysis and get rid of this little line. We're not far away from reaching the sell side from the 29th of August. It's not monthly sell side, but it's the closest sell side liquidity pool that we have available after taking out September lows. Once we took them out, we immediately pulled back, holding resistance on the inversion fair value gap. So since we've been doing these live streams, we have been pretty spot on, or not me, but well, the DXY has been trading very nicely here on the daily time frame. We saw the SMT divergence to EU. We hit the 50%. Let me turn on the monthly. No, not happening. The 50% of this entire move from the down to the upside. So right here we see we hit that 50% level, just barely, but we immediately rejected and we looked for a bit of a retracement in case we want to continue higher. In the weekly outlook for the VIP members, we actually also took a look at the monthly and the bigger picture for the DXY. So if you haven't watched that as a VIP member, make sure to check that out. The link for that is in Discord. But right now, just looking at the daily, we rejected off this inversion fair value gap here after closing below it, perfectly off the 50% level. And from here on, we kept on selling off Thursday, Friday, Monday, yesterday. And then to Tuesday, we have this new day opening gap. We already filled that in. And the next obvious target would just be our sell side liquidity. Once that happens, well, we have another bullish fair value gap all the way down here that we could be keeping an eye on. But we're getting closer and closer towards the end of the month. Entering the last month of the year, December. We'll see what happens there. But we take it 1 week at a time for our bigger picture outlook. This was our main objective for the DXY on a daily time frame. And this is our main objective for the Euro US dollar at 1.1 for Euro US dollar. All right. Let's keep an eye on EU and on the DXY, but we can pretty much leave it like that on a daily time frame. This is our sell side target. Let's compare the indices. So NQ had this fake pump up without really taking much buy side, but is now also following ES here. All right, so we took these equal lows. I hope no one did take a long based on the potential 6 sister setup. Looks like we're just going to continue lower. And everyone who tells me that VWAP is nonsense because ICT is not using it, try it out yourself. Best thing you can do. Stay open-minded. I always use it as a baseline where we usually see accumulation, sideways movement, or rejection from. Let's see. So we took that sell side. And we're moving away from it aggressively. All right, let's check that out on a 1 minute time frame. We took these equal lows. Take a look at both NQ and ES. NQ also took out the low. I like that. This theoretically would be an inversion fair value gap now. Same goes for this one. Following the 5 minute time frame, checking out the 15. Getting rejected off the 15-minute inversion up here. Now let's not try to be too quick, because we still might reject here from our inversion fair value gaps and continue lower. The confirmation, the real confirmation would come in if we close above this high or move above this high, really showing bullish momentum, getting a fair value gap pullback, target London buy side and Asia buy side. Getting in down here, I'd say, yeah, there's not much confirmation in that. And we could simply continue lower to target London sell side or some old sell side from last week. Better safe than sorry. EU is continuing higher off the bullish fair value gap over our target at 1.1 here on the future chart. The XY target here, the low of Wednesday, the 30th of August. What happens afterwards could be consolidation, could be an immediate pullback. We will see. Let's wait for this next 5 minute candle to close. And Q is also showing some strength again. Same goes for ES. Similar to what we saw right here, but we didn't take out sell side really. Maybe trapped some longs. Getting them stopped out. Let's see if we immediately close back above this old bullish, now inversion fair value gap. See if we have any questions on Discord. Come on. There we go. Nope, no questions on Discord. Let's see if we have any questions on YouTube. Nope. I guess everybody knows their stuff already. Is anyone in a trade right now on ES, EU, GU, gold, oil, whatsoever? Feel free to share. I'll take a look at that and give you some feedback. Nothing wrong about getting some feedback in. One and a half minutes before this 5 minute candle is going to close. On the 1 minute time frame, we're pushing back in, unfilled volume imbalance. I still don't like the momentum here that we see. It's still labeled as 50-50. DXY is on its way to take out sell side. EU is continuing up higher to our overall daily buy side target. Where's that coming from? Looking at the 5 minute time frame. From a long time ago, a couple of weeks. Guess you just gotta have to trust me with that, unless you watch the weekly outlook. And I think the DXY just hit our sell side liquidity pool right here. Continuing the overall bearish trend right here, below the 50% of this entire Q3 of 2023 rally to the upside. Below the 50%, we could be looking at the ICT fib retracement, I guess. Yeah, right here at 102.564, we would have the golden pocket area right here. Let's actually make that gold. 61.8 Fibonacci retracement. Down here, right around the August lows, monthly sell side, we have the optimum trade entry area. So expecting a bounce from somewhere around this area. Since since this volume imbalance, daily new day opening gap that we haven't filled is continue bearish. Using bearish fair value gaps, inversion fair value gaps, breaker blocks as resistance to continue into deeper sell side liquidity. So Q3 run up, Q4 consolidation until relief 31st of October. That's really when we started the rally on ES if we look at higher time frames. This entire, let's go to the daily here quickly. 31st of October, right here. That's when we started that run up, correlated with the move lower on a DXY. To put things into perspective. And right now we're right at the high, just going sideways right now. We took out buy side, more buy side would be coming in at 4595 or at the big figure 4600 before we take out the high of the year. Will we see a retracement before taking out the high of the year? Will we even form a new all-time high for the year 2023? We will see. Only time can tell. Only time will tell. A 15-minute time frame. Let's go back to that. Automatically adjusted. Keep an eye on things. So we're still respecting this inversion fair value gap. EU, couple pips away from taking our daily buy side objective. Just following order flow here. Once we got the confirmation, quick turtle soup, sweep, moving away from that very aggressively. Confirmed market structure shift to the upside. Let's call it a break in structure with a candle close. Using the previous day's high, this bullish fair value gap as support now. We could also be looking at the highest up closing candle as our breaker block. Coming in at exactly the same price for the continuation higher. So we move sideways, deliver a, we could call it a 1 push, 2 push, 3 push, 4 push, 5 push setup. And after we hit that 5th push, not taking out the Asia session high, so just engineering liquidity at the high of the day, we pull back to take out the most recent 1, 2, 3 higher lows that we have put in place of the overall free drive setup. We wick that. That's pretty much on you if you like to take these turtle soup entries. You would have to have a very high conviction that we're going to continue higher. But if you're good at these setups, well, keep on using them and perfecting them. But I would get in once we have the turtle soup setup confirmed with the new break in structure, breaker block, bullish fair value gap for a simple continuation up higher. Place the entry right on your breaker block. Stop loss doesn't even have to be right here at the low, but to be safe, targeting a nice 2-to-1 risk to reward, to our daily buy side objective. That would have been the trade. We have been speaking about that during the weekly outlook. This is my weekly target for EU, the easiest drawn liquidity on the daily time frame. I didn't have an answer on how we're gonna deliver into it, but very likely with a nice and clean 2022 setup. Not a 2022 setup, but well, we get the idea. We're not coming from the low of the day, but we sweep sell side, shift structure with a break-in structure, bounce off the fair value gap plus breaker block. It's always the same, and then yeah, we can frame that narrative. We don't know for certain, don't get me wrong, that this is the setup that delivers into this, but it offers us a 2-to-1 risk to reward ratio getting in on here. This could still fail, and we would try again until our weekly objective basically has been met. And yeah, consider the job done for the week. Use decent risk on that, and we're good. So the DXY, looking at the daily time frame, immediately rejected after we hit our sell side pull right here. Let's see how that continues. Go back to our indices. Also rejecting, but a little bit more boring right now. So we close below our inversion fair value gap, or old bullish fair value gap. We use it now as resistance, respecting it with the candle body. Not giving us a stop hunt wick back above this buy side to stop out some early shorts. That was one of the reasons why I didn't like to enter. It's still too close after the New York Open, where we tend to get these stop hunt wicks. That would simply stop me out, but now perfectly we respected the inversion fair value gap, the two inversion fair value gaps here basically, and delivered lower from here, forming a new lowest closing price. So right now, all eyes on London sell side liquidity. We have to break through this bullish fair value gap. And our last level of defense before taking that out would be this one tick wide bullish fair value gap right here. We also have a inversion fair value gap here to the left, but I don't want to draw up thousands of boxes, but we get the idea. Inversion fair value gap after taking sell side. That's where we're holding support right now. Once we close below this fair value gap, I'd have more confidence going for sell side, but I'm missing the proper buy side liquidity sweep. So for me right now, no setup here on ES. Let's focus on our EU tape read into our weekly objective. See if we can hold support on this 5-minute bullish fair value gap after the DXY already hit sell side and is rejecting. So taking partials is smart, especially when taking a look at the DXY at the same time. Almost hit our 2-to-1. Yeah, got very close to it, couple of ticks. Bullish value gap right here. What we do not want to see would be a potential market structure shift right here once we close below this most recent higher low. So we've been forming higher highs and higher lows. Basically also with a free push setup right here from the low. First push, second push, third push, market structure shift, pullback, take out some lows before continuing higher, just engineering some more liquidity, potentially. Indices are still messing around. Let's see if we get the 5-minute candle close below here. And also check if we have any questions. Still not. Oh, goddamn. So for everyone that's watching on YouTube and on Discord, are you interested in me explaining the Apex Trader Funding copier and how you can use that to your advantage to, basically, I would almost consider it a cheat code, to be really honest, comparing it to all the other future funding firms. It really is a cheat code, like, period. Do you want to talk? Do you want to, listen to that or watch me explain it during the live stream? Or do you prefer watching it with the new video that's being uploaded in a couple of minutes, 70 minutes left until 4K is processed? let me know. Simply put it here into the public chat, or yeah, let me know on Discord. That's the way. Analysis and trading are two different pairs of shoes. Good morning, H. Smith. Nice to have you back. We all know that in hindsight and without putting ourselves in risk or danger. That's at least how our brain or our emotional system sometimes, yeah, recognizes when we are in a trade. We're like, all right. So yeah, now that's why I'm looking at Euro USD to get a better feeling for it. During the last few months, I've only been doing ES, but I've got a CFD challenge going on right now. I'm not trading it actively, but yeah, that's why I'm looking at Euro USD. Have a 0 spread on that challenge. So yeah, just getting the hang of it. These CFD challenges, they don't have a expiration date anyway. You pay the fee once, and yeah, I could start trading it next year if I want to. Explain, no setup now. All right, let's do the stream. Let's see. The YouTube chat is dead. I don't know what those guys are up to. But anyway, now there's no setup right now. Let's take a last look. No, let's leave it at that. So, in the new video, I talked a little bit more about it and went into depth. But yeah, the main concept is that if you use the Apex trade copier, and I just looked at that earlier, if you go to Apex, Ninja Trader 8, Trader 8, here they pushed a new update for the Ninja Trader 8, Trader 8, and TradingView Trade Copier. So the cool thing is now, I mean, I remember speaking about that to H. Smith, I think 2 weeks back or something. We spoke about the Ninja Trader Trade Copier, and the cool thing now is that, well, you can connect all different account sizes together and change how much risk. So the ratio, you have your master account, let's say, for example, that's a 100K account, and you have a couple of 50K accounts and 25K accounts. You can set the ratio. So let's say you enter with 2 contracts on your 100K account. If you set the ratio to 0.5, you enter with half the amount of contracts. And if it doesn't work with a mini contract, it's automatically using micro contracts. You can modify all that in the settings. It's only working with the Ninja Trader platform, but the cool thing is that with the new update, I asked them about it this morning. So you have your leader account and your copier accounts, your slave accounts, where all the trades from your leading account will be copied to. You're not forced to trade on Ninja Trader anymore. And I really like that. So you can still execute on TradingView or Trader8 and yeah, copy the same exact trades with a healthy risk to reward ratio and overall risk management, good risk management to all your slave accounts, so the accounts where you copy the trades from your leader account. So the question now is like, oh, why would I do that? What opportunity is being presented here? Well, it's pretty simple. If you have 10, 50K Apex accounts, you basically have $25,000 in margin available now with those 10 accounts. Yes, it's a little bit of a more expensive investment, paying the activation fee and paying for the challenge initially, but with a 90% discount, you actually end up getting away really cheap with it. I think a $1,500 investment. But what it allows us, that trading futures right here on TradingView, comparing it to a single account, let's say our daily goal is to make $500 and we go for a simple 1-to-1 risk to reward, risking 1% per trade on our $2,500 account. Well, we would have to risk 1% in order to make $500. Comparing that to 10 Apex accounts, we only have to risk 0.2% per trade per account to achieve the same amount in profit. We don't want to risk $500 per trade per account. We want to look for a consistent income stream where we can make ideally $500 on average per day. So the question is, how sustainable is it? Well, good question, because on a 50K account where you only have $2,500 in margin, well, risking 1% per trade, you could only afford to lose 5 trades and your account is blown. Well, doing the same thing with 10 accounts at the same time, you actually can lose 5 times more, and you get really close to the losing streaks that you can have with a CFD funded account. Because with CFD funded accounts, you usually have a 10% total drawdown. That's giving you more room to breathe compared to 5% drawdown, or sometimes even less with trade day or take profit trader. I hope you get the idea. So by using 10 accounts, we can leverage more margin and risk less per account. The more accounts you use, the easier it gets. So with Apex, you can actually hook up to 20 accounts. Then we would be sitting at 50K margin. And if we risk, then we would only have to risk 0.1% per trade to end up at the same profit target that we would. So we would only be risking $50 per 50K account, which would once again double our max losing streak to 50. And I don't want you to buy 20 Apex accounts like right now and hook them up to the trade copy. You can do it step by step and set it as a goal for the next 4, 5, 6 months to slowly add those 50 or even 25K accounts to your trade copier. Like, you just keep on doing what you're doing right now, and you buy 2 or 3 challenges, hook them up to the trade copier, and get them funded. And once they're funded, start to increase the risk, because that's really powerful. Imagine having 20 accounts with $50,000 margin, and you would only have to risk 0.1% per trade, per account, $50, to basically achieve the same as you would with one account risking 1% per trade, leveraging the margin. And you could lose up to 50 trades in a row, assuming that you use proper risk management of, don't over trade, over leverage. If you're trading all these 20 accounts in a row, if you enter with 10 minis YOLO, hoping you get a payout quick, well, again, then I guess then you're destined for failure and you can't really cry about it. But if you stick to rules and you really take this serious as your trading business, then I think that's the end goal. Comparing that to any other future funding firm, you still have your drawdown, and with Take Profit Trader, Trade Day, and Topstep, you can only have up to 3 funded accounts at the same time. I know, okay, 3 funded accounts is already something, but comparing like this opportunity, having so much room to breathe, being able to risk $50 on a $2,500 margin account is really powerful to still make the same amount of money that you would by risking 1% per trade. That's pretty awesome, I think. Hope that makes sense. If you have any questions about that, feel free to ask me, please. Okay, so we hit our take profit target eventually on EU. And what do we do after hitting it? Reject. Been getting pretty good on EU. But like I said, trying to develop that feeling that I have for ES right now. Also on EU. That's why I keep looking at it. So let's see, rejected off the VWAP once again, close above our fair value gap right here. Not interested in ES at this point in time. 1% of $2,500 is $25. How you risk max 500? Yeah, I'm calculating 1% of our entire equity, not the margin. Because if you would risk $25 per trade, off your margin 1%, good luck trying to reach a $3,000 profit target. That's going to take you forever. You can do that once you're funded. but I hope you get the idea. 20% is $500 per trade. Yeah, off your margin, definitely. But it all depends on how long you want to spend trying to pass your challenge. Of course, that's what every normal human being would do if they deposit 2.5 grand into their TradeAway account. What would you do? Would you risk 20% per trade? No, you wouldn't. You would risk 1% and slowly accumulate more and more over time. But we don't do that. We use the leverage that Apex Trader Funding, Take Profit Trader, Trade Day is offering us at a low price. So we don't have to deposit $2,500. We only have to make a small investment of, in the case of Apex, of $18. Once we pass that challenge, we pay our $150 activation fee. Then we can start to risk less and less. And yeah, get payouts from trading a demo account and never really have to touch our own money. Of course, it's not that simple. And we burn through a lot of money until we get our first funded account. And once we get our first funded account, most of us end up blowing it because, well, it's still not that easy. You just made it above step number 1, but then there's still infinite other steps. Being consistent until you get a couple of payouts in and you really feel that confidence. But yeah, that's the entire idea. So most traders right now on Apex, let's say they, for example, me, if I trade a challenge on a 50k account, I risk 0.5%, $250 per trade. And this allows me to have a max losing streak of 10. And I can't stomach that. I really can. Max losing streak of 10 would be a pretty bad week, or basically me making, let's say, 5 trades following the rules and 5 revenge trades or over trading whatsoever, or maybe over leveraging using twice the risk on one trade. But yeah, that would basically be on me, and I would only do that during the challenge stage. Comparing that to trying to risk, let's say we have 10 accounts, 25 grand in margin, risking 0.1% of that would be $250. So we would still be able to lose 50 trades in a row. I guess 250, 25, 0.1% risk per trade. Now we would be able to lose 100 trades in a row if I'm not completely wrong. 250 times 10. But we only risk $25 per account, per trade, 0.1%. Yeah, I don't know. You get the idea. Do the math yourself. Understand how it works. I explain it in more detail in the video that I'm uploading right now. But you gotta admit it's a pretty good opportunity comparing that to Trade Day, Take Profit Trader. Don't want to say they're not good prop firms. They're still good prop firms with good rules, but they don't offer that opportunity to be able to really leverage the amount of accounts to your advantage. You immediately walking away from our profit target. So this could be the confirmed market structure shift after hitting the daily buy side level. Perfectly walking away from it. Here, same goes for the DXY, starting to reject. Let's take a look at NQ and ES. Like yesterday, at the 9:30 open. Ugh. Chop, chop, chop. We saw some nice price action later on during the PM session. I engaged on that, making back the 3 losing trades that I had during the New York AM session. Right now, I just don't want to engage on that. We're still inside our daily range, haven't expanded. If we measure from the Asia session high to the low of the day right now, and use our PD array, we're bumping it to that 50% area. Premium discount. But not going anywhere. The good setups usually happen at the look below and reverse, or the look above and reverse. I'm trying to force something on, on ES inside. Yeah, most of the time it's already better than a 50-50 chance. Inversion fair value gap, potential inversion fair value gap as well. Yeah, well, in reality, higher high, higher low, higher high. Our market structure shift on the 1 minute time frame has already happened. This would be our 1 minute breaker block. We see that last pump up into our buy side. This would be our breaker block. Bearish value gap right here. If you like to enter on the 5 minute time frame, now we have the break-in structure confirmed on the 5 minute time frame. So any entry around this area to go short, I think would be a good call. Let's try to get in on that 50%. Do a little paper trade. 30 pip stop loss. A 2-to-1 would get us down all the way just below the new week opening gap. Let's see how that plays out. Even though I don't like to short right away. Let's see. Let's frame it down to a 1 minute time frame if we're already looking at it. This is our 1 minute breaker block paired with the 1 minute bearish value gap. So this is going to be our limit order to optimize our risk to reward a little bit more effectively. Limit order would have been filled. This is our 1 minute breaker block, fair value gap. Let's see. Inversion fair value gap. This one is still bullish. Yes, it's pushing to the upside. Still holding up at the VWAP. I want to see a close above this inversion fair value gap here from London, where we'd basically have another one right here. Initially, we kept holding support at this level. We can see, so that's just my logic. Higher probability fair value gap is what I call that. We saw 1, 2, 3 touches inside of this old bullish fair value gap. We failed to make a higher high until we close below. And then we see 1, 2 times we hold resistance, respected by the candle bodies, and we use that to continue lower. Sell off into sell side liquidity here at the low of the day. Equal lows with those two relative equal lows from Wednesday last week. Point of origin, right here. A old support area that has been flipped into resistance. Continue lower, use bearish value gaps as resistance, continue lower, 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 without offering any better entry opportunity than volume imbalances right here and right here into sell side liquidity, rather aggressive entries. And then 8 AM came in, made that last drop into sell side, 8:10, and then that new 15-minute candle starting at 8:15, immediately reversed back inside of our range. Until 8:30, the next 15-minute candle, we just consolidated. 9 AM, 9:15, new 15-minute candle, continuing into the inversion fair value gap right here. And yeah, then since 9:30, all we did was chop. And I think with all these fair value gaps, we should be pretty well covered. We kept holding support on the slowest bullish fair value gap paired with the inversion down here. Didn't really respect this one, so I might get rid of that. But the close above here would be a break-in structure for a potential continuation into London buy side. Let's see how much that would yield. 3.5 points, 4 points and a quarter to the midnight level. Almost 5 points to the daily open at 4561.5 and 8 points to the current high of the day coming in at 4565. Setup on EU, we already got our rejection from our 1 minute bearish fair value gap paired with the breaker right here. Bearish breaker block, right. We're seemingly continue to push to the upside. Let's see what that looks like on a 1 minute time frame. Yikes. Equal lows once again. Sweep sell side shift. Yeah, let's wait. Let's see what NQ is doing. NQ looks like it's struggling a little bit more to get back above the highs. We can see that kind of a diamond pattern here on NQ, where we initially form higher highs and lower lows. Now we're forming higher highs and higher lows. You get the idea. Classical charting pattern. But also 9:30 New York opening is within our daily range. Let's see what happens if we look at the regular trading hours opening gap. Turn on a midnight and 8:30 open on both ICT all-in-one indicators without having to do all the work ourselves. Regular trading hours opening gap has already been filled in immediately. That's where we closed yesterday. That's where we opened today. Looking at regular trading hours, we filled that in. On ES, we actually did not yet. But in Q we did, to the tick, and we rejected. On ES, we still have some way to go. Coming in right here, yeah, basically that London buy side liquidity, 4560.5. So that's a nice to know confluence, or nice to have. We're moving further to the upside. Here on the 5 minute time frame, we close back above here. A nice push above the VWAP. Now we hit this buy side liquidity from 9:30. Check out the 1 minute time frame. Let's wait a little. See if we get the confirmation close above here without immediately running all the buy side. Understand that our regular trading hours opening gap is coming in right here at this high, London buy side. Keeping that in the back of our minds. Discord. The target on EU was the daily buy side liquidity level that we spoke about on the weekly outlook. Let me go to the daily here on EU quickly. Contract adjustment. Monthly, weekly? Daily. Looks like the line shifted here. Not sure what's up with that. Well, in this case, thanks for letting me check on that. Oh, no, we still hit it with... Nah? What's going on? We fell short of it by a couple of ticks. I wonder how that happened. That was the daily buy side liquidity draw. We did not hit it. We missed it by a tick or so, or 2 ticks. Yeah, 2 ticks. So still potential to the upside. But well, right now we're in the short. Good to know that, because if I would be in a trade, I would make sure to secure some partials and move my stop likely to break even. So likely just engineering some liquidity here. But we understand that we basically hit that same on DXY sell side liquidity, on EU buy side liquidity. Expecting some sort of a bounce back or pullback once we take out that daily sell side here on the DXY. understanding that we failed to take out the daily buy side or our weekly objective. Well, target simply 2 to 1, close enough to our target. 2 to 1 came in right here of the stop hunt, break of structure, breaker block, fair value gap entry. So right now, did we actually end up closing below this bullish fair value gap? Yes, we did. Inversion fair value gap. Let's see if we use that. Yes, it's rejecting again. 15-minute candle is closing in 5 minutes. It's already 10 a.m. or past 10 a.m. Well past 10 a.m. No SilverBullet setup so far. Well, at least not without sweeping external liquidity. Only internal. We sweep these equal lows, move away from it, leave behind the inefficiency to enter long on. For my liking, a little bit too far-fetched. So right now, after closing above all these inversion fair value gaps, let's see if we hold support on this highest bullish. Could be used as a potential entry, not for me. Already in decent profit for the day. I'd like a better setup. We swept the high, swept this high. But this would some sort of be a paper trade for me. Stop loss below the slow. 5 points into London buy side. Our regular trading hours opening gap. Yeah, easy 1-to-1 risk reward of the VWAP paired with the bullish fair value gap. How did that line move down here? That's already hit that buy side. No inefficiencies. The next inefficiency would be all the way up here on the daily. 1 hour time frame. No. No. That's correct. Don't want to spread false information here. Did anyone take a trade yet? Don't forget to roll over your contracts, for example, gold. At what stage do you change that? It's not contract rollover yet, at least for indices. I think we're gonna change contracts again late December, usually 20th or 18th of December, over to the March contract. Well, maybe that's some gold thing, but gold should also be traded on the Chicago Mercantile. Let's see. GZ, now on COMEX. Chicago Mercantile Exchange, CO. November, December, GZZ. I don't know, but there's definitely no contract rollover yet. Maybe on gold. I don't trade gold. I can't give you that information other than looking into the TradingView contracts. The November futures likely. Let's take a look at that. Yeah, where that's gone. No liquidity on that one anymore. GZX. Let's take a look at the December contract. Yeah, December contract looks like the one that's being traded right now. You should be able to look for that ticker. One more minute to go for this 5-minute candle. And for the 15-minute candle, let's see where we're gonna close here. No, not with me right now. Once I did my little recap for the day yesterday, I was kind of disappointed for my trades that I took during the early AM session. Trade number 3 was really just trying to force something, and trade number 2 was a revenge trade. In case you watched yesterday's live stream, just trying to make back the profits that I made during London. And during London, I mean, there was no doubt in my mind that we're gonna go long. I even entered with 2 contracts here on my funded account. I rarely do that. And yeah, that only happens if I have high conviction that we're gonna move at least 5 points away from that, securing $500, something between 350, 250, or 500. We looked initially at the potential accumulation during Asia, early London manipulation, consolidation, last manipulation to the downside here, sweeping the previous day's low, and moving away aggressively from that, leaving behind the inefficiency. Kind of a no-brainer. We perfectly ticked the order block and moved away from that. And that's the high quality setup that I want to be trading, period. Nothing else. Same goes for yesterday, London. Asia trend this time. We consolidate once again at the low, below Friday's low. Consolidate, have one last manipulation at the low, move away aggressively from that. I didn't enter on this bullish value gap on Monday. I entered once we closed above this high right here at the 2 AM London kill zone opening. My breaker block was right here. For all the VIP members that watch me on the stream, they can back that up. Breaker block right here. And I had my limit order, my first limit order set at the high of the breaker block. My other limit order was set right here at the New York midnight level. Understanding that for a last time we trapped shorts, but instead of continuing lower into sell side, we aggressively moved away from that, go sideways until the new hourly opening at 2 AM. From where on we moved to the Asia session target. Then we retraced, still ending up to hold support on our old breaker block, the highest up closing candle between our last manipulation. There was a pretty nice setup, and those are the setups that make sense to me at the extremes of the daily candle. So right here, daily candle opened up at the extreme, at the lower end of the extreme scale. Move away from that, give me enough confidence to enter on that. Even the longs right here, I think Volker, you took that one off the breaker for the run into the relative equal highs here during the Asia session. And then, yeah, look at New York, like already after seeing that first top wick to the upside, I could have closed the entire session. Like, there's no point. We kept on respecting this bullish share value gap. Nah, not even respecting it. We closed below it. Only until, yeah, 1 AM really. I took a long from right here, this bullish share value gap, into buy side. Afterwards, market structure shift. Nice little market maker sell model all the way down into sell side liquidity. Well, not these equal lows, but some sell side liquidity. Enough of a movement in order to be like, yeah, to be content with the profits. But overall, to sum it up, chop. And then chop during London, Asia here. Early London manipulation, consolidation, taking out a higher time frame point of interest. Boop. Right now here, we're still inside of the range. Now we hit our 5-minute bullish share value gap. This was our entry for the little paper trade here to target London buy side. Curious to see if that plays out. EU, I'd say I would have stopped that at break even after realizing that we didn't hit our daily buy side objective. Just a little stop hunt to engineer some more liquidity, trap new traders short with the market structure shift setup. So I would, yeah, have stopped that out at break even, to be really honest. Would only be interested in that reversal setup if we clear that daily buy side objective. Running in profit, almost 2 points. 5 point would come in right here at this old bearish value gap. Lining up nicely with our regular trading hours opening gap right here, this yellow box, light yellow box right here. Let's see, just say paper trade. If you like that trade and you're really confident in that potential, yeah, let's call it. No, it's inside the range. I don't like that. I promised myself not to take those trades inside the range. So just a little feeling trade to warm up. It's already 10:30. My timing window is over at 11. Whoa. Time flies. Already streaming for an hour. Oh, whoa, 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 whoa. More than an hour. Whew. Kind of forgot about time here, but that's no issue. Not going to chase it now. Maybe get something during the PM session, something clean. We have a volume imbalance right here. Let's see if that remains open and we use that to deliver higher. Take a look at NQ. It's still struggling to close above the 50% of the regular trading hours opening gap. Still be, yeah. Even if we reverse from here, it's not the setup I would be looking for. We already had a winning trade during the New York AM session right here after 8 a.m. Stop hunt with the new hourly candle, 8 a.m. Immediately move away from that with the new hourly candle. 8:30 comes in, retrace, retest the breaker, bullish share value gap, hit a 2-to-1. Still a decent setup. Let's check out the 1 minute time frame. Could still end up playing out, but well, kind of missing the buy side objective being hit. The only thing that would line up with the potential reversal here on EU to take out some internal lows right here from our 3-push setup. First push, second push, third push, and fourth push. Well, we could even make a 6-push setup out of it if we look at all these tiny little retracements. That's usually how we can look at order blocks. So every down closing candle within this uptrend right here for the early AM session kept ending up holding support. So right here, down closing candles, hold support, close above, we hold support, close above this down closing candle, we hold support, close back above this one right here, retest it, hold support, close above this one, we retest it, retest the high or the body, hold support, and then we failed to hold support on our down closing candles, shifting structure. So I would be looking to target internal sell side. Which would be coming in right here at this low. This low right here, every short-term low. That's just sitting there waiting to be hit. So overall, we see the short is still playing out. Did anyone enter on that EU short? With their funded accounts. I'm not trading EU yet. Maybe next year. Just want to give myself enough time to really get a good feeling for it. 1 minute time frame. Market structure shift. Breaker block. Paired with the bearish share value gap. See that? How quickly we took out this low and how basically no time at all it took us to reverse back up into our breaker block. Oh, yeah, this could be the run for our weekly objective. DXY selling off. Yeah, slightly pushing now as well. Also that one last stop hunt. So we had this volume imbalance. We took out the low one last time, and then here at 10:38 we got this move to the upside at the same time where we got that push on EU. And there goes buy side and our weekly objective, the DXY back at the low of the day, below sell side. Yep, there's our weekly objective. So we did nothing wrong. Not taking the short. Engineered liquidity is what we call that. Moving away a couple of ticks before we hit buy side. Taking out some stops before we reverse up. And there goes ES. Let's go. Eventually we win. The tape reading entry would have worked. 10-point target to Asia buy side should be hit. Take a look at NQ. NQ is already above Asia buy side. We filled in the entire regular trading hours opening gap. So would have been I'd grade it as a B, maybe a B plus trade, because it's not coming from the external range. That 8 a.m. low has been left behind. If we would have swept that on either one of them, ES or NQ, I would have liked that. Pre-New York Open, but we understand that we don't have to do that, being content with the profits we made during London. Kind of. Of course, we always have that inner voice. Oh, we missed out on making some money, but we put the tape trade on here. Like I said, if you felt confident in taking that, there's the setup. Look at the 1 minute railroad tracks. Mm-mm-mm-mm-mm. 1 minute time frame. Where do you see railroad tracks? Nice expansion. The DXY keeps on selling off. Let's see if we get some reaction in this bullish share value gap here. That would coincide with the bearish share value gap we have on the daily here on EU. We are now at that 1.1 level. Move to the upside. Okay, yes, hit the Asia buy side target. That's done. If we really want to expand here, previous day high, previous week high, coming in at 4,580 and at 4,570. God damn it. Nice 10-point move. By the railroad tracks, Agent Smith. Those are railroad tracks. Why is that? Consolidation. Railroad tracks is a bearish candle immediately followed by the bullish candle, I thought. Out with 950 on my 225k account. If I had lost, I would have buy more. So you're doing that approach that I suggested to use to past challenges, where you risk a little bit more. Nice, well done. Yeah, I considered buying a couple more 25k accounts before the live stream. I would just do that for the PM session. And yeah, because I've already made the profit, and I guess because I made the bad experience yesterday, I still had fresh wounds. on trying to avoid chop here during the New York session, but still decent 5-minute setup, just not coming from the low of the day. And when we put it on here, up to you or up to the trader to decide if he wants to take that risk. Next target would really be 15 points at 4,570, the previous day's high. And then potentially also the previous week's high up at 4,580. One-minute time frame. Took out the equal lows, moved away from it. But even on the 1 minute, the only potential fair value gap entry would have been right here, and which would have also worked to chase the move to the previous day's high for a quick 5 points. Right here to the new week opening gap. Entry of the highest bullish fair value gap, but from here, not even a bullish volume imbalance entry on the 1 minute. Right here we have a unfilled volume imbalance, but we didn't even, felt the need to fill that in. Immediately we continue to the A-sharp buy side. Once we hit that, leave behind a bullish fair value gap, fill that, hit the new week opening gap, and now we're starting to reject here. Consolidation prior to the New York Open. New York opens up, takes out stops high and stops low, consolidate, move away from that low. Yeah, I would have felt more confident if we would have hit sell side here. We decided to take on the paper trade, played out, or I did. Day trader made some nice profit on the 25k accounts. A little bit of financial advice. If you don't pass the accounts within one trade and you do that higher risk approach, then it's better to step away and finish the other $500 on those other 6 minimum trading days that you have anyway, or just tomorrow. Instead of trying to force it to pass it on day one. There's no point in that. You either set your risk. Okay, if my stop loss is hit, the 25k accounts are gone, and I accept that. I lose like $20 or $30, and I just buy another 2 ones. And eventually, with a healthy 50% win rate, I'm gonna pass 2 or 3 out of 5 or 6 accounts, 50%. And yeah, then all you have to do is trade with micros after that. So if you would have done that right here, enter. I knew I should have gotten some 25k or 50k accounts for this live stream, because I already made the profit for the day during London. Considered it, but then I just ran out of time after recording the best future funding firm part 3 with the little Apex trade copy explanation at the end, creating the thumbnail, blah blah blah. Ran out of time, had something for lunch, jumped in front of the charts, and then I saw the chop. Not ideal conditions to trade the funded account, that's why I held back a little bit. But overall, I mean, we put the paper trade on the chart. Some of our members ended up taking it. $15 account, yeah, it's really acceptable. Of course, afterwards you pay the activation fee, and then it makes sense to hook it up to a trade copier and take it more seriously, in my opinion, and not risk all your equity on one trade. Wouldn't even count towards your payout, but we get the idea. Any thought on NASDAQ? Let's take a look. Took out this high. I would still say that maybe we're gonna hit the previous day's high and continue higher from here. Looks pretty good. especially if ES is gonna hit Monday's high and Friday's high, maybe even. Not too unrealistic to anticipate this consolidation down low being followed by higher prices. 4580 is the previous week's high and 4570 previous day's high. Friday's high at 4574. That's only 10 points away from where we're at right now. So I would just look for higher prices, ideally already being long down low. We spoke about that diamond shape setup, unfortunately without taking sell side one last time. That one last time happened right here at 8 AM with that new hourly candle. Then we immediately bounced away from it. This would have been a confirmation. That's why I ended up placing the paper trade here. Target London and Asia buy side. Now we could hold support on our London high paired with this inversion fair value gap. We could hold back up on our high of the day. Maybe with this highest bullish fair value gap. It's really up to, yeah, I don't know, many different scenarios. How far we could be potentially retracing, maybe the midnight level, maybe even the slowest 5-minute fair value gap here. Maybe not even retrace at all and move into the previous day's high, right where we are from. Trying to chase this now, I'd say where's the point? The opportunity was presented, bullish fair value gap. After taking equal lows, break in structure, not confirmed yet. At least on a 5-minute time frame, expansion higher. Risk 5 points to make 5 points. So I just wasn't ready for my funded account to take that risk after making a good profit during London. Therefore, the setup wasn't clean enough for me. But for a 25k account challenge, for 15 bucks, definitely. More than definitely. Nice rejection wick. The DXY hit the bullish fair value gap here on a daily. Alright, see you tomorrow, Volker. Let's see if we have anything on YouTube. Still not. Everyone likes to remain silent without engaging. I mean, that's okay. Did anyone watching on YouTube take up that 5-minute setup here on ES? Other than Day Trader and Agent Smith? Next time I'm just gonna enter when Agent Smith is going long too. Agent Smith, you got the term railroad tracks from the Market Maker video, right? If so, what's your definition of railroad tracks? Because I didn't, what I understood isn't just sideways movement. Doesn't look like a railroad track to me. What I would assume a railroad track would look like is a bullish candle and a bearish candle right next to each other, or a couple of tiny little candles in between. Get the idea, like that looks more like train tracks. Did they say that in any of those Beat the Market Maker videos? Barcoding range consolidation. Interesting. Very interesting. But I guess it would have to fit the overall narrative. Here we could also label railroad tracks, and at that point in time it looked more bullish than bearish. Has to fit the narrative, I think. Didn't hit the 5-minute bullish share value gap yet. On NQ, we're retracing further into that area. Let's see if we have any more questions. Otherwise, I would work on publishing the best future funding firm part 3. $500 away from funding the 250k account. Let's go. And I hope everyone got the update. H & Smith Trade Day is introducing a activation fee now. I just saw it this morning on their Discord. Right here, they have shared that message. Trade Day has made the difficult decision to introduce a one-off activation fee for those traders successful in passing their evaluations and moving to either funded sim or funded live accounts. This only impacts traders who do not currently have an active subscription with Trade Day, so if you're on a 14-day free trial or are thinking of joining Trade Day, you want to act now, blah blah blah, because this is due to the rising costs of Trade Day, cost to Trade Day of onboarding, offboarding, and making payments to both funded sim and funded live accounts. As part of our current expansion, we aim to introduce a new payment processor in December for all withdrawals to offer a more comprehensive, faster, and more flexible payment processing. The one-off setup fee for a funded sim or funded live account will be $139. Funded live traders will still be subject to the monthly professional market data fee. The good news is, if you're already with Trade Day, this does not affect you. We will set up your funded account for free. Also, for any trader who signs up before December the 1st, we will set up your funded account for free. But after the 1st of December, yeah, you end up paying $139. There's a 20% discount code also inside the comment section right here on YouTube for Trade Day. I spoke about that and how it compares now to all the other future funding firms in this new video. In the good old comparison style. Oh, look at that. Nice bounce off the midnight level here. Perfectly, actually. Perfect bounce off that midnight. Immediately rejecting. 1 minute time frame. Filled the unfilled volume imbalance and bounce away. But I'm going to call it a session here. The same goes for NQ, back inside of the regular trading hours opening gap. Not gonna lie, the opportunity was right in front of my eyes. I even placed a paper trade just to, scared of giving back the profits I made during London. Especially since it's more than I usually make during London. So the good setup. Head over to my bento book. That's the funded account right now. This week I lost a little bit more. 57 trades in total. 28. I guess those were micro executions. But so far this week is starting off pretty good. Even with the New York session trade, that would have been fantastic. But I'm happy with that. I'm not too far away from reaching my payout level. That's going to be used to invest into more 25 and 50k accounts to use the Apex account copier method. Where I really have a lot of room to breathe and also mentally don't have to be worried about risking, because you end up only risking $50 or $25 depending on how many of these accounts you already have in your copying system. Wow, and that just helps me mentally. I'm not risking all the profit that I made today. The profit that I made today, it's not really going to be impacted because I'm trading on more than one account. Yeah, I like that. We'll see after a long-term review how that plays out. If it actually helps or if it doesn't make a difference at all. I think it will. Gives me more room to breathe. with max 25 to 50 losing trades in a row. Don't have to worry too much. Like usually if you are at a losing streak of 3 and you risk a little bit more, or 4 or 5, yeah, you start thinking about, oh, will I blow my account? And thinking about that usually isn't the best thing, because that leads to more thinking, and more thinking leads to more mistakes, and the less we think usually, the better we end up as traders, really. All right, time to journal. Bounced off the midnight level and our inversion fair value gap here. Target previous day's high, EU. Retracing into this huge bullish fair value gap here in Q. Also bouncing away from that midnight level. We'll see if NQ has the power to target the 1600s now, the 1690 levels again. We will see, time will tell. Stop hunt, bounce off midnight, inversion fair value gap, bounce away. Yeah, nah, not worth the risk at the extreme. Nice, yeah, time for a payout, I'd say. 100k account. Let me check that out actually. Trade day. $100k tier. Trading max drawdown calculated at the end of the day. Alright, so if you happen to withdraw $1,000 now, you will only have $2,000 left of your trailing max drawdown. Meaning basically that you're on your 100k challenge, it's funded now. Once you get above $3,000 in profit, then your trading max drawdown is being locked in at 100k and you don't really have to worry about that anymore. So anything above $3,000 profit can be paid out without losing any of your margin. Because in reality, if we think about it, it's already a 100k account. It's a $3,000 account with lots of leverage. Being able to use 10 minis on a $3,000 account, pretty high up there. If you withdraw 1,500 before reaching that, trailing max drawdown calculation, you only instead of a $3,000 margin, you're left with half of that basically. I guess it comes down to if you want to be a funded live trader with trade day. I don't think you even have the chance to pick between. I think once you reach that $5,000 profit, you automatically move to a funded live account. Do you want that, Agent Smith? You don't mind? What's your take on that? Volume imbalance filled. Bounce off the Asia session high. Little paper trade while we're talking. Yeah, EU hit our daily buy side target now. So we could see a potential inversion fair value gap setup maybe to hunt some more stops. Bollinger Bands and all. To avoid fees. Well, how much is that professional fee that you have to pay with the live account? I'm not sure, maybe like $150 or something per month. Well, I'm not sure how it is tax-wise. if you trade a funded live account in America, I think it's easier than being in America than being overseas in Europe. That's why trade day is not super attractive for me, to be really honest. Demo accounts, it's all nice and good, but trading live capital, that would be something else. For a company overseas, I wouldn't be able to claim myself as a contractor who's trading demo funds and getting paid based on that. But, well, I mean, if you have your 100K account, that's less than maybe 0.2% you end up paying per month for the data fees. Yeah, it's a tricky question. I totally understand how you feel right now. Like, should I get the payout? Should I request it now? Yeah, but nah, because I would lose part of my margin. And that's the tricky thing. Like in this new video, I talked about the 0-day withdrawal policy where you can withdraw on day 1. But yeah, in reality, it's nothing more than good marketing. Like, you have all the other companies offering payouts after you reach a specific profit target, like Apex, or with Topstep you need 5 minimum trading days. So if you offer instant payouts, well, there's always a little catch to it. Like always, that instant payout catch is basically that. Let's say you're now sitting at $101,000, like you are Agent Smith, and at the end of the day, your trailing max drawdown is being moved to 98K. So if you request your $1,000 payout, you basically you lose $1,000 off that. So let's say it happens to you, you end up in a little losing streak. I don't know. At least you got a $1,000 payout. It's paying for some of the challenges. Or you just wait until, I don't know. That first payout always feels good. $1,000 are $1,000. It's gonna pay for a couple of No, I think it's up to you. Of course it's up to you, but you get the idea. If you want to move over to a live funded account, 120. What do you mean with 120? Ah, you mean the professional fee? Message retracted. All right. Yeah, on YouTube, guys, I'm gonna end the stream here. I'm just gonna hang out with the VIP members for a little bit longer. So thanks for joining in today. I hope you actually were able to capitalize on that paper trade that I put here on the chart. You had enough time to enter. 5-minute bullish value gap. We spoke about it. Just because I didn't enter on stream today doesn't mean you don't have to. If your intention is to use my ideas in confluence with your analysis to kind of copy trade. So yeah, thanks for joining in today. I will be back on tomorrow. Make sure to check out the new video once I'm publishing it in a couple of minutes, let's say next hour, and check that out. I will be talking about the Apex Trader funding trick or cheat, I would say, with the trade copier. So until next time, thanks for the likes, and maybe next time we get some more engagement in the chat. But I don't want to ask for too much. Let's just take it one day at a time. Bye guys, take care.